Hi, I'm Mary Kopczynski, the CEO of RegAlytics. Welcome to this week's regulatory roundup. This week there were 401 alerts having to do with financial services and insurance in the United States, 170 of which had to do with coronavirus. We have provided a free RegAlytics coronavirus financial alerts tool, so feel free to go to www.regalytics.ai and sign up to get it for free. The regulator of the week is the Federal Reserve. There were quite a few major developments worth noting if you happen to miss them, but a note of context here. I have a number of friends and family who don't fully understand how this all works, so here's a little background. The global financial crisis of 2008 was caused by interconnectedness, meaning similar to the coronavirus, where if you are in contact with someone who is ill, you get ill. The crisis made it painfully clear that if the banks get sick, then companies get access to capital taken away, and therefore if customers and investors can't meet the gap, then we all lose our jobs. So to prevent this, the Fed made some major steps to ensure that banks will not get sick. For that reason, the Fed is the regulator of the week. So 1, the Federal Reserve announced last Thursday that it was working with a number of international banks to establish temporary US dollar liquidity arrangements, also known as swap lines. These facilities, like those that already exist between the Fed and other central banks, are designed to lessen the strains US dollar funding markets, which helps mitigate strains for all credit to households and businesses. Furthermore, the Fed announced coordinated action between the Bank of Canada, the Bank of England, the Bank of Japan, the European Central Bank, and the Swiss National Bank to further enhance the existing swap lines. They're increasing the frequency of a 7-day maturity operations from weekly to daily. This will also speed up access to capital. Second, the Fed announced a commercial paper funding facility that will also support the flow of credit to household and businesses. This facility is going to provide a liquidity backstop to U.S. issuers of commercial paper through a special purpose vehicle that will purchase unsecured and asset-backed commercial paper directly from eligible companies. So what does that mean? It means if you need to issue and get a loan, you have a buyer of your loan right away. The Fed also created a money market mutual fund liquidity facility which will make loans available to eligible financial institutions that are secured by money market mutual funds. Money markets are common investment tools for families, businesses, and a range of companies. So this essentially means that banks can use your 401k to prove that it has enough assets to take a loan. Generally, this is all a good thing. Which leads to our topic of the week, and I, frankly, am tired of coronavirus, but don't worry, we'll cover those alerts too. But the topic of this week is liquidity. Again, a little bit of background. So financial institutions are heavily regulated. If you put your money in the bank, you should be able to absolutely trust and know that that money is yours and it will remain safe for when you want it later. Some financial institutions have the ability to use some of your money while it sits there doing nothing, so long as they can pay it back at a moment's notice. Capital requirements are rules that identify how much money of yours they can actually use. These capital buffers are set so that a bank can weather major storms just like the one we're in. Think of it as rainy day money. One thing to understand, however, is that when it actually rains, like it is right now, you may need to use that money. If we don't let the banks use that money, they just will go bankrupt, and then we're all in trouble. To that end, in addition to all of the Fed's provisions and announcements around injecting capital into the markets, the FDIC, which is focused on insuring your deposits, issued a number of critical alerts related to capital requirements. One, the FDIC made a simplification to a regulatory capital rule that applies to community banking organizations. What does that mean? That means community banking organizations can provide loans to companies in emergencies without being confused anymore about how much they can give out. Additionally, the FDIC gave out clarification around resolution plan requirements for foreign banking organizations, or FBOs. This guidance is meant to assist these firms in developing their living wills, which is essentially a document that maps out what a foreign bank would do in a proverbial economic crisis, which unfortunately is not a drill right now. Also, the FDIC, the Federal Reserve, and the Office of the Comptroller of the Currency issued a statement regarding the use of capital and liquidity buffers, as well as a QA in response to public questions. Finally, totally not the same, but similar, companies that list on public exchanges, like the New York Stock Exchange, for example, typically have to confirm a certain market capitalization standard. If they don't meet these requirements, they can be automatically delisted. Well, realizing what a significant number of companies will probably be delisted with the current crisis, NYSE issued an emergency temporary rule suspending their normal market capitalization standards. Okay, so now it is time to break down coronavirus news for you in federal, state, and SRO. So, first, federal. I think everyone has already heard this by now, but you don't need to pay taxes until July. There are exceptions, so be sure to confirm that it's true for you, and you can always file early if you're expecting a refund. The CFTC and the Division of Swap Dealer and Intermediary Oversight has issued 2 additional no-action letters providing temporary targeted relief to one U.S. bank that helps finance America's oil and gas sector, and also another one to those who operate commodity-focused investment funds that the CFTC regulates. So if you're in that space, take a look at those no-action letters and see if they might apply to you. The FDIC urged the Financial Accounting Standards Board, or FASB, to delay certain accounting-related rules so financial institutions can focus their immediate attention on COVID business challenges. FINRA issued a notice to warn members to avoid confusion between the stock of NASDAQ-listed company Zoom Video Communications, to be distinguished from the stock of similarly named companies quoting and trading over the counter, such as Zoom Technologies and Zoom Telephonics. So be aware, if you're trying to invest in Zoom because everybody's using it to do remote coronavirus communication, make sure you pick the right one. The SEC provided temporary exemptions from rules such as Form ADV and Form PF, as well as pretty much any rule that requires people to vote or hold meetings in person. The SEC did remind the public that they expect all financial advisors to abide by rules on insider trading, meaning don't do it. HUD, along with the FHA, implemented an immediate foreclosure and eviction moratorium for single-family homeowners with FHA-insured mortgages for the next 60 days, so you can't get kicked out of your house. Freddie Mac announced a nationwide suspension of all foreclosures, sales, and evictions of borrowers living in homes owned by the company. It also announced a variety of additional mortgage relief options, including expansion of its forbearance program to incorporate additional impacted borrowers. The company has also reminded servicers of its existing suite of mortgage relief options to assist borrowers, while also making additional disaster-related loan modifications available. Finally, the Department of Labor today announced the availability of $100 million for dislocated worker grants, which leads us nicely into state coronavirus updates. Starting with Indiana, the Attorney General asked consumers to file complaints with the Office of the Attorney General should eviction or foreclosure proceedings happen during this health crisis. The South Dakota Department of Labor and Regulation is accepting reemployment assistance, otherwise known as unemployment insurance, claims from workers who are not able to work due to the pandemic. Texas, which has prompt payment laws for insurers, has now extended claim handling deadlines by 15 days to help carriers respond to the COVID-19 outbreak. The Pennsylvania Insurance Department submitted to the Pennsylvania Bulletin, which is sort of their federal register, notices that urge insurance carriers to be flexible when assisting individuals and businesses affected by the outbreak, but two, to offer guidance for continuing operations during the pandemic. Pennsylvania sent a formal letter to the U.S. federal agencies requesting special enrollment periods for uninsured or underinsured Pennsylvania residents in response to the outbreak. The New Jersey Department of Banking and Insurance also issued a bulletin encouraging entities that are regulated by the department to assist customers who've been adversely affected by the outbreak. The California Department of Insurance is strongly encouraging all insurance companies to take steps during the crisis necessary to maintain their ability to process and pay insurance claims. Additionally, it is requesting that all insurance companies provide a 60-day grace period to pay premiums so that policies are not canceled for non-payment during this challenging time. Finally, all health insurers in California must submit a notification describing how the insurer is communicating with potentially impacted insureds and summarizing the actions that the insurer is taking to ensure that the healthcare needs are met. In securities regulation, Alabama provided temporary relief for the registration or filing of securities professionals, relief from signatures for Form U4, and relief from annual filings and document delivery requirements by state registered investment advisors. The Florida Office of Financial Regulation continued to be busy providing an update to Florida's financial institutions as well as its consumer finance businesses and professionals. They issued an emergency order that extends all license renewal deadlines for a period of 30 days, plus some practical advice on how to manage COVID-19. Arizona announced a bipartisan budget that will include $50 million for the state's COVID-19 response efforts. Telehealth was also a big topic on the state's radars this week. After working closely with the Montana Insurance Commissioner, 4 major health insurance companies operating in Montana are voluntarily expanding their coverage of telehealth to aid in the state's response to coronavirus. Rhode Island's governor also signed an executive order directing health insurers to follow previously announced instructions to cover visits conducted over the phone and online during this crisis. The Public Utilities Commission of Rhode Island has also issued an emergency order mandating that all regulated utilities not terminate services at this time. The California DMV asked California enforcement officers to exercise discretion for the next 60 days in their enforcements of expired driver's license and vehicle registrations. And that's hopefully going to stop people from coming into the DMV to renew their licenses. And I really hope New Jersey does the same thing. Connecticut announced that in coordination with several other states, its presidential primary will be moved to June 2nd. The Georgia Legislative Black Caucus issued a statement in response to the fact that the powers of the governor were greatly expanded in Georgia, something traditionally undesirable. The caucus intends to remain engaged to ensure the governor uses his authority responsibly, justly, and equitably. It is unfortunate, but this crisis we are facing underscores why the states need to invest more in our healthcare infrastructure, especially in rural communities. To that end, rural hospitals in Georgia are receiving $5 million in emergency funding. Georgia has also issued an anti-price gouging alert. And finally, the state representative has urged faith leaders to temporarily suspend operations in person or stream them online. And finally, the exchanges have continued with massive revisions to their trading halt and automatic circuit breaker rules. But new this week were a number of revisions to various exchanges' business continuity plans. Acknowledging this, the SEC said they will monitor the movements of the market and adjust expectations around the consolidated audit trail rollout accordingly. And now, the moment you've all been waiting for, other news. Crypto first. ICE Futures US is extending options on Bakkt Bitcoin USD monthly futures market maker program, as well as the Bakkt Bitcoin USD options contract executing broker rebate program. The SEC obtained an asset freeze to halt an ongoing securities fraud perpetrated by a former Washington state senator and two others who were selling a digital asset called the Meta One coin in an unregistered securities offering. According to the complaint, the defendants never distributed the coins and instead used investor funds to pay personal expenses and luxury automobiles, including a $215,000 Ferrari. Seriously, it's always the cars. In all, the complaint alleges that the defendants raised more than $4.3 million from more than 150 investors in and outside the United States. Georgia passed the Broadband Opportunity Act to support rural quality of life improvements regarding online education, economic development, and healthcare access for those in unserved or rural areas. It establishes a set of standards for the ecosystem to follow in regard to privatized fair access. In sad news, the FINRA Investor Education Foundation conducted a study showing that female investors lag behind their male counterparts when it comes to investment knowledge and confidence. Both Ginnie Mae and Freddie Mac made big announcements that they are moving away from LIBOR, so take a look at those press releases to see where it's going, because people, this is really happening. And finally, the National Credit Union Administration invites the general public and other federal agencies to comment on the extension of an information collection titled Suspicious Activity Reports. I think many of you are familiar with this. This is just part of their regular cycle of getting feedback. So if you want to give them some thoughts on SARs, now is the time. That's it this week for RegAlytics US Alerts. Go to www.regalytics.ai right now and sign up for our coronavirus financial alerts tool so you have it all under control. In the meantime, I'm here every Wednesday morning, and the longer version is, of course, on YouTube.